SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and, well, I don't have to tell you, you know these are interesting times, to put it mildly, and Danielle Park is with us now for our bi-weekly discussion of trends. And Danielle, welcome in Greece. Unbelievable what's going on there, huh?
Yes. Well, no, believable, Terry. Totally believable. When people have run out of money long ago and have been surviving upon the political maneuverings of financial institutions and central banks and extending extra lines of credit indefinitely, we're way past a liquidity problem. We're fully into insolvency area. And, you know, it's interesting because although the Greek people all say, apparently by the published surveys, that none of them, or a very tiny minority of them, want to leave the euro, most of them think that they are better off part of this club than to have to depart and go back to the drachma. I think they're completely wrong in that in the longer run. But in any event, although people don't want to leave the euro, I think it's becoming more and more likely by the day that that's actually going to be the result here, because, they keep trying to flog a dead horse. They keep saying, well, you have to find money. Well, you have to find more cuts so that you can fund the debts you owe to all these financial oligarchs. And the truth is they don't have enough money, full stop. And they have money leaving their banking system at such a rapid rate. They're having to introduce capital controls very likely in the near term. And that'll just make everything accelerate further to the downside. So as the growth continues to roll over and the debt continues to mount, and now their interest rates are, 2-year notes were 28% or something, Kerry, there's just no possible way that this money can be repaid. It screams the need for restructuring, has done for the past few years, and still the powers that be, ignore that very obvious thing because they want to try and ring fence the banks some more, let traders and bankers get off with a few more $billion here and there. And it's just creating mayhem everywhere. Like, for example, interesting chart I saw today. So 25% of the world's global bond market is now in negative yields. Okay, 25%, 53% of it is yielding less than 1%. And 60% of the debt that has negative yields is in Europe. So you can't even comprehend a world this messed up, Kerry. This means that, for example, the Swiss 10-year note is a negative yielding instrument today. Germany all the way out to 8 years. Netherlands, Denmark, France, Austria, Sweden, Finland, Belgium, all these countries are negative yielding. And then, as I say, more than half the world is less than 1. Well, the finance system as we know it does not function at all in the way that this is currently set up. Because now you have this ridiculous scenario where mortgage rates are priced off of 10-year bond yields typically. That means that if you've got a negative yielding 10-year bond, you've got a negative yielding mortgage. Just think about that. So now people, they're getting principal off their house instead of interest adding to and compounding the debt over time. Your mortgage debt is going to go down because the bank has to pay you for giving you the money. And this is the scenario we're seeing with the banks themselves in Europe. The European banks are now being paid to to loan money. It's completely messed up. And, insurance companies and pension funds and real life humans cannot function in a world this messed up.
Yeah, that's a great point, because I always thought capital markets existed, Danielle, to allocate capital to worthy recipients. And the way they did that was through interest rates, or through a mechanism where the worthiest borrowers paid the least and the least worthy borrowers paid the most. But we don't see that anymore, do we?
No, because they broke that system. There is no longer anything to do with free market. It's all to do with rigging and controlling and some people trying to be omnipotent and godlike and, dominate free market forces. And what they've done is they've queered it into this big ball of total disaster that doesn't function for anyone but the last few extractors at the top. But here's the thing, they've broken it. And once you've broken it, it's just a matter of time before, unintended consequences. You think you're controlling all these millions of moving parts? You're not. It's going to blow up. And when it does, a whole bunch of damage is going to be done on a whole bunch of levels. And, I am so tired of seeing this. I'm so tired of talking about it, Kerry. But what is a rational human to do? You can't succumb to the madness. You can't start running around like monkeys with, like the monkeys on the business media talking about how great everything is. I mean, you have to hold on to your wits, and you've got to do everything you can to protect yourself and the customers who trust you with their savings from these maniacal conditions. And, this too shall pass. I'm sure of it, but it has been one hell of a dark chapter.
Well, how much longer can the powers that be and the governments try to literally it's like the reed trying to hold up against a gale force wind or a hurricane, holding up, bending. How much longer before it breaks against the market?
Well, it's impossible to say, sadly. It's impossible to say. But we know for sure that it's gone so wacko now that it could break at any moment. We know that there's so much false orders and HFT and nonsense going on, and looking as activity in financial markets today. There's so much ghost and fabricated fake transactionary that's looking like something's happening. And then there's all this cash sitting on the sidelines of people like ourselves who do math and do analysis and actually care about risk. And we're saying, listen, the bulk of people's life savings that they need to be there to pay their bills, to fund their expenses and to take them into their old age, that needs to be in low risk deposits. It never was meant to be in high risk quote investments, and certainly not the case when everything across the entire yield curve is the lowest yielding in a generation. I put a part on the blog, an article this week about the housing market again, because everyone's been talking about how, it's not possible that, because we've had a huge boom in Canadian housing, as they did in Australia and New Zealand, and you've had a big revival in quite a few areas in the US as well, right? I mean, a lot. I think on average, I saw our housing market is still below where it was in 2006 in your peak, but a lot of progress, right, has recovered of late. And a lot of people have been saying until rates go higher, that'll continue. Well, that may be the case, but here's a factor that's working against the global central planners. The population is growing older by the day. And that the population that was born, between that 1946 and 62 are now in the 52 to 69 range. And as I was driving around my area in the last little while, I noticed this spring there's a lot more signs coming up on high-end properties than you would think logical, perhaps, because you would say, well, those are the people that have, quote, the most equity and the most savings. They're the highest, most expensive properties on the market. And, interest rates are still really low. And also unemployment is still relatively low in North America. It's ticked up a bit lately, but it's still historically at the low end. So why in the world would so many of these properties be coming up for sale this spring? Well, I think part of the answer is a whole bunch of things, but demographics. So older people all needing income to furnish, to pay for their expensive, utilities, property taxes, maintenance of these huge properties that they're now sitting with. And they're doing that at record low yields. So, even even the ones that have amassed savings, even the small minority that don't have levered homes, like 68% of boomers are expecting to continue with mortgages into retirement today. So even the small percentage that maybe has everything paid off and has some cash savings built up, they're still saying, geez, my income's been cut in half. I used to get sort of $50,000 a year off $1 million in savings, and now I'm getting maybe $30,000 a year. And I think it's at risk. I don't feel comfortable with the weird stuff I'm having to hold to get that yield even. So you're seeing a lot of people say, you know what, we don't need all this. We don't need all these things. We don't need all this insurance we're paying to protect all this stuff. Why don't we start downsizing? And I think that alone could flood the market with these properties. And then you got to look at and who can afford to take them off the boomers. And that in itself could be a pretty formidable force for these very lofty asset prices. And I think, the same thing happens when you look at financial assets.
Interesting you say that, Danielle. What I'm about to say is anecdotal, but yeah, there's a demographic wave. And all you have to do is look at the trends in the U.S. over the past 50 years, understand what you're saying is 100% true. Florida, population 1960, 5 million. Population today, 20 million. Now, part of this is warped fiscal policy, taxation policy in the U.S. Florida has no state income tax. New York has a 10% state income tax. People do vote. You do vote with your feet, and capital goes where it's treated best. So no question. Texas, population 1960, 9 million. Population today, somewhere around 28 million. Correct me if I'm wrong, 27, 28 million. Population, California, in the mid-60s, around 16 million. Today, 38 million, but now they're fleeing. And I can go down the list. But air conditioning has something to do with this. But also when baby boomers are looking to downsize and they're looking to cut, when you're looking to cut your cost of living, these are the places that you go to: Texas, Florida, Arizona, New Mexico. Tennessee has no state income tax. Population going way up. Heard from somebody who was in Nashville recently. Place is booming. All these red states just happen to be in the South. And the fact is that your purchasing power, even though your income is not as high, your cost of housing is far lower. So you're going to see huge amounts of housing going up for sale as baby boomers decide that they don't want to be there anymore. And now the point of my story. So I'm in an outlet mall, interestingly enough, in Florida. You might be familiar with it. It's out there, Broward County. It's called the Sawgrass Mills Mall. I mean, it is a huge mall, like 3 million square feet. All these condo commandos go there, and I'm in a store, and I look up, and I'm looking at it. I said, this guy looks so familiar. I'm sure it's him. I almost wasn't going to approach him, and then I heard him on his cell phone. I said, yep, that's him. Goes, hey, how you doing, Dodd? And he looked at me and said, Kerry, is that you? Hadn't seen him in years. And we're talking, and he's had a place down here for years that just come down to a month or two at a time. And I said, so when are you moving down? And he said, well, I think we've just about had it. The winter was so bad this year, just had it. Ready to sell my company off to some trusted employees and get the heck out of Dodge. And anecdotal, yes, but this is a guy who's, I guess he's in his mid-60s now, has had it with the weather, had it with the taxes. He mentioned taxes as a primary concern, and now he's ready to leave. In New Jersey, they've got an exit tax. So we're seeing this all over, and this is a big mega trend, and where you don't really have any warm places up north in Canada. Are we going to see basically a bunch of people fleeing up north, coming to the warmer areas in the U.S.? Is that going to be a super trend, at least for long periods?
Your healthcare system scares the hell out of Canadians, and so people are not likely to give up. Are not likely to give up our state funded healthcare system, especially as people age. I know actually some people in the US who are talking about moving back for exactly that reason, because, they're starting to have the need for more invasive procedures and saying, wow, an operation like that is $90,000, or relatively small procedures are so much money that they're just, they're concerned that even if they have insurance now, they may not qualify later. And they're thinking of ways to get back out of that system. But I guess, it's not so much that people are particularly calculating in this. I think it's just the natural progression of age. And they're doing it in the way that baby boomers have influenced trends from the very inception of their lives. They've done it because of this big bubble of people moving through similar life experiences and having similar needs and interests all at the same time. 40% of people surveyed recently reported that they're worried about running out of money in retirement. This is the baby boomer cohort. I was actually surprised it was that low. And that tells me that many people don't understand the math they're facing today, because the numbers, statistically, when I look at the numbers, 80% of the money, people should really be worried about running out of their money. Because as I say, even if they have the good fortune or good sense or combination of both to be debt free, heading into their 50s with some savings built up, with these yields and these opportunities at current, insane prices, on most financial assets, on most businesses, everything has just been priced right out of the stratosphere through these, last 8 years of ridiculously low yields, rates from central planners, et cetera. It's really just left people, with very few good options. And so that means that you either play a waiting game for the mess to hit the brick wall and then pick up the pieces after that, or you jump because you're impatient, perhaps, and you try and do something. Don't just stand there, and you end up overpaying for things. And so even the people who have overpaid and think that they're somehow getting some kind of income and they're making ends meet, when you see the next financial downturn and those assets lose 25 to 50% of their value, people will realize that they actually didn't get ahead at all, and they'll be in no position to absorb that kind of balance sheet hit at that stage in their life. So it's a very tricky time, as I say. I've never seen anything like it. I saw Paul Tudor Jones giving his TED Talk in Vancouver there a couple of weeks ago, and he said, and it's probably the craziest time he's ever seen in his lifetime, and he's older than me. So I think it's nice to at least have, I guess, a lot of people recognizing how mad it is. I had a call from a bond desk this morning who we've in the past, bought fixed income from and or through, and they say, hey, we're not hearing from you. I said, hey, there's no good products out there at a reasonable price, and I'm not prepared to buy junk to look busy. And he goes, hey, I hear you. A lot of municipalities are my clients, a lot of pensions are my clients looking for product, and they're just not finding it. So you either have a choice of, forgoing your fiduciary duty and forgoing what is rational and prudent and walking into the fire to try and look like you're doing something, or you do the noble and harder thing, in my view, which is to keep carefully protecting the capital in every way you can think up. And if that means that your returns don't look great for a while, then I would rather do that than sacrifice principle and then try and explain why it wasn't really my fault afterwards.
Yeah, better to be a live coward than a dead hero. So.
I guess so. But, we need, I guess it's just, as I say, this two doors, as Nomi Prin says, it's not Washington and government, that it's not government and Wall Street or finance that's a revolving door. It's two doors into this one house, and they've built this mansion of credit and debt that's cost and sucked, strength and resilience out of the economy and out of families and households and companies all over the world to make this big Babylonian tower of debt. And, we know that it isn't sustainable. It's just a question of when and how the chips will fall when they do. And
fall they will. And we got so many other challenges, just the water issue. In California over the weekend, it was amazing, Danielle. When I flew in there, and I always like to look out the window when I'm landing, it's just a holdover from when I was a little kid. But the place really did look like a desert. And years past, it didn't. It used to be very green and plush. But now with these new water restrictions, it was just parched earth with some green patches. It was scary looking, I got to tell you. And the state has lost its political will to do anything. Half the water is wasted, literally flowing into the ocean to protect this one species of fish, which looks like a minnow. It's called the smelt, the Delta smelt. And what is the point of it? It was a lawsuit. There wasn't really a public policy agreement to come together and save this smelt. And it might well be that it's a great idea to save it. I'm not sure. I'm not an expert on the Delta smelt, whatever it's called. Maybe we really need it to preserve the food chain. Maybe we don't. Some say that it's already extinct. But rather than having the courts make these decisions, same as having the courts make decisions about abortion, gay marriage, this is something, and war, we need our elected officials to make these decisions rather than either the court or the president. You need the elected officials to come together, and that's their job, to actually set policy. And again, a failure of government. And now there was an article I was reading that in the old days of California, you had these governmental solutions for problems. Now you just have what's coming down to anarchy, where they just can't get their acts together. And as a result, you are suffering. If you live out in California, don't have jobs and you don't have solutions. Government's supposed to solve these problems that are bigger than the individual, bigger than the town council, bigger than the county, regional problems, statewide problems that can't be solved. And if government can't solve them, then the purpose of government kind of falls by the wayside.
You know what I think? I think that all of this stems from this obsession with making everything free. People thought that if they could just get prices lower on everything, on the cost of debt, that somehow we would be able to afford everything and everything would be wonderful and prosperous. Well, all they've done is, mispriced everything. So this is why I go back to, I think there's a bunch of problems that are contributing to this mess we have. One is the big interests controlling the policymakers, campaign dollars coming from lobbyists, and your courts are wacko, in my opinion, in the U.S. Yeah. Why they allow the amount of contributions to come in and think that doesn't thwart or denigrate your democracy just boggles the mind. But anyway, you've got all these big interests writing checks that are controlling both sides of the aisle, and so you're getting nothing done. And then you've got all these risk sellers that are prospering greatly because they're selling risk to everyone, and they just want prices lower so consumption can continue. Meanwhile, if you would just allow assets to price correctly, if we would allow interest rates to find their own way, if we would price water and other resources in the very valuable manner in which they actually are, so critical to life on Earth, stop, giving all the oil companies all this free water to use in their process. Just let water be priced as a very valuable commodity. And this whole rationing stuff, you can't ration it on certain people and allow others to use as much as they want of it. Just price it all the same. And I guarantee you, everyone will get a lot more responsible in their usage, will get a lot more careful about what waste they're doing. And a lot of these companies have just been aided and abetted over the years so much that they're like, they're zombie companies. Like, if you can't make a profit without gouging resources for free, without paying zero on interest rates, without paying decent wages to your workers, if you can't make a go of it with even a 2% rise in interest rates, as an example, if you can't do a full cost accounting of the inputs you're taking from the earth, then you're not actually a real business anyway. You're not actually a viable entity. And what's happening is you're allowing all these weak players to continue and crowding out the growth of all new players who would thrive on competition and reasonable market forces. So, I don't really think it's policymakers are the blame or any one thing. I think it's a function of letting these, dominant franchises control too much of the policy and then rig markets and rig prices so that they have it all their way, and it wipes out competition and accountability. And I think that's more why we've got a lot of problems. I think if you priced water correctly in California and other places, you would all of a sudden get a lot more intelligent usage and policies and management going.
Yeah, well, they were all looking for the free, risk-free trade, the grand trade, and that just doesn't work. Anyway, Danielle, we can find you at jugglingdynamite.com. Must reading. I read it regularly. And as always, you'll find the link on financialsurvivalnetwork.com. Make sure you go there, see the latest stories today. And yeah, the sooner the markets are allowed to function and take back their normal function, the better off we're all going to be. Because look, 200 years, the markets function the way they were supposed to. We had the greatest increase in living standards known in the history of man. When the markets function, we're all better off. Anyway, Danielle, we will see you in a couple of weeks. Hopefully the weather will improve, continue to improve, and wish you the best.
Thank you, Kerry. You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.